Hello, everyone. Welcome to this week's live session. I've started just as somebody has started doing some drilling outside the office, so I apologise if you can hear that. Just put the risk warning up. Just as a quick reminder, what we cover in these, we go through all the major markets. So we'll look at stock market indices, currencies, gold, oil. We'll take a look at Bitcoin as well, obviously, because that is moving a lot in the last couple of weeks. I think it's just hit fresh recovery highs today. And as usual, if you do have any questions, if you just use the YouTube chat thing on the right-hand side, then I'll answer them as we're going through today. A lot has happened over the last week. You know, some of the big movers. Well, really everything. I mean, we've seen the S&P 500, the broader US stock market index, briefly trade out to fresh all-time highs. We've seen gold up on these tensions between the US and Iran, and also up off the back of that. Sorry, I should have said oil up on the tensions, and gold up as well. I think gold's hit, is it a 5 or 6 year high? We'll take a look at that in a minute, but I think that risk warning has been up for long enough. So let's get into it. Let's start with Bitcoin. I think it's been a big mover, and we don't talk about it very often because it tends to be pretty boring, but it's been anything but boring since April. So let's just go back and just remind ourselves of what the story was for Bitcoin. Clearly, we had the mania in late 2017, trading up nearly 20,000 for one Bitcoin. The price collapsed, which wasn't really a surprise, I don't think, during 2018, and it was just bumping along, traded as low as almost 3,000 in December 2018. Then it started moving. We started looking at it again in April, really, after this move, and I still haven't bought any. It's very bad, really. But we saw this move here in April that broke out through all these previous highs. So it did look very different to the various sort of dead cat bounces we had on the way down. And what was encouraging was the fact whenever it broke higher, we didn't really get the collapses that we've been used to before, going back in the past. We did see buyers willing to step in on any weakness, and we had big support left at 6,500. It bumbled around a bit early June, and then it started taking off again the last couple of weeks. It's up, 50% in the last 2.5 weeks or so. And looking at it today, has it touched 13,000? What's the high today? 12,900, so 12,900 today. An incredible move, really. We've gone sailing through this old resistance. I think we've got, potentially some resistance up here, pretty much at 13,000. And it was this high way back, January 2018 highs, this sort of level. And understandably, pretty overbought on the RSI down here, but plenty of momentum. The only thing I would be wary of, already, if like me, you look at Twitter now and again, you see the Bitcoin faithful getting a little bit carried away with where it's going to go. I'm already seeing numbers like 100,000 being chucked around, and it could happen, obviously, but I think if you're in something like this, given the volatility, you need to have a strategy for getting out, if things change. And we know with these cryptocurrency markets, things can change pretty quickly. So for me, if I was in it, and I'm not, unfortunately, then I'd be, trailing a stop up behind it. But given the day-to-day volatility, I mean, yesterday's range, what was yesterday's range? The low was 11,000 pretty much. The high was 11,800 almost, So we've got, 7-8% swings on the day to day. So I think if you are trailing a stop or looking to get in, and place a stop loss, you just need to give it a lot of room, because the thing is so volatile. But at the moment, it's really strong. Are we going to see 20,000 again? I mean, that would be the thing that I'd be looking at here. Famous last words. I don't think we're going to see it in a straight line from here, because I think there'll be plenty of people who maybe bought back here, bought right at the peak, December 2017 and into early 2018, who've sat on massive losses, relatively speaking, in percentage terms since then, who may be only too happy to offload any old Bitcoins they've got up at these levels, and get out maybe near break even. But I think that's the opportunity. I think, as I've been saying really all the way up, and haven't been buying it, if we do see any sell-offs, I think the thing to do, I mean, the last half decent sell-off we got, it only sold off for a couple of days, beginning of June. Watch for the strength to come back in, and then look, well, where can I get in with a sensible stop loss? So I think, we're going to move higher from here, but well overdue a correction. And I think for me, that's arguably the opportunity here in Bitcoin. But it has, what's it done? It's more than doubled really since April now. So we're 2 months, 2.5 months into it, and we're up 2.5 times what it was in April, when we're up 3 times where it was trading at the end of March. So that is a heck of a move. I'm going to do a more in-depth video on Bitcoin later today. So that's going to go up on our channel. So we'll look at things in a bit more detail and look at levels in a bit more detail. So to never miss out on these, we're putting out a lot of content at the moment. So to never miss out on this stuff, just make sure you're subscribed. Let's just take a look at some of the hourly levels. We'll place a trade actually, which will absolutely guarantee that this is the top in Bitcoin if we place a trade in it during this. But looking on the hourly charts, if we did see, let's say we saw it under a bit of weakness the rest of the week, I think we've got some obvious levels to watch ahead of 10,000. Again, it's an obvious psychological one to look out for. 10,000 on Bitcoin, so 10.2, 10.3 were the lows June the 22nd, which is only a few days ago. So if it started to sell off from here, it's more than $2,000 away from where it's trading now. I think that's one level to watch out for. If we did see it come under some pressure, but there's really no arguing with this trend. Let's put a trade on for the sake of it. So you can trade tiny with us. So if you're trading 1 Bitcoin, then at the moment that's a $12,500 position, and the leverage on Bitcoin, because of the regulations changing, everyone has had to wind down the leverage they offer on very volatile instruments like this. So you're only getting 2 times leverage. So you can see there on my margin requirement, it's nearly 5,000 quid for a $12,500 position in Bitcoin. So you can trade it tiny. So I can trade as low as 0.01. There we go. And my margin requirement is 50 quid. So let's put that on, because then I will almost guarantee that we're going to call the top and we're going to see a sell-off. So we'll do 0.01 of a Bitcoin, click on buy. There we go. Done. So we bought 0.01 Bitcoin at 12,557. We'll come back to it and see how well that's doing. I think I've got a few old trades running in here from previous videos I've done. I'm up overall. I've got a lot of losing trades. They're all losers, apart from the Aussie dollar trades, which is making a bit, relatively speaking. And there's the Bitcoin trade in there. So 12,557 is where we're in. So still strong. That's it really. Not much more to say apart from that. That's not Bitcoin. Where's my Bitcoin disappeared to? Here we go. Still strong, but I'd be wary of a sell-off from here. But any sell-off, I think, looks like a potential good trade from a risk-reward point of view. Someone said, why are the other coins not heading that hard? I don't know. I'm gonna look at it in a bit more detail for the video we're gonna do this afternoon. But let's take a look at Ethereum. So we'll look at Ethereum. There's the Ethereum daily chart. So that's doubled since April. So that has underperformed Bitcoin, which is up 2.5 times ish since April, and still strong. Ethereum is pushing out to its best levels since August. And then Ripple. I think, I'm far from an expert on cryptocurrencies. For me, it's just the chart and movements. But for me, I think Bitcoin is always the focus. When we had that massive rally in late 2017, it's the classic markets phrase, a rising tide lifts all boats. So all sorts of altcoins and just crazy stuff was getting lifted as well. Maybe I think we're in a slightly more considered, slightly more wary market now. So for me personally, I would just be focusing on Bitcoin. If I wanted to trade this stuff, I wouldn't be trying to trade everything else. But that's just my view. But I'll talk about all this in a bit more detail in the video we do this afternoon. Let's get into these other markets. So let's leave Bitcoin now, and let's start off with gold actually, because we have seen a pretty explosive move in gold really through June, and we've been tracking this. I've been a gold bull since the second quarter of last year, and I think a few people have as well, and then been quite frustrated by what was going on with gold. From February, we saw the highs in February up at 1345, and then the market into May just drifted off. So we spent 3 months drifting back, the price losing about $70 an ounce. And I was saying back here, look, if the price of gold is going to bounce from anywhere, sort of late May, it really needs to start getting a move on now, because we're back to that trend line. We'd had this 1, 2, 3, 4, coming back for the fifth touch of the trend line, round about 1270, and they're saying, look, the price needs to get a move on. But I wasn't really expecting that sort of move. So yesterday, gold traded as high as almost 1440. Okay, so we are out at the best levels since, we've got to go all the way back to 2013. So it is a 6-year high. We saw a 6-year high for gold yesterday. Clearly, that recovery is still intact. I am still long gold. I think I've talked about buying bits into this trend and buying here. I ended up buying at that high in February as well. But I think it's overcooked up here. We've seen this surge, and I think it's been we've had a combination of things. We've had the tensions between Iran and the US. There was that US drone, the unmanned drone, shot down the other week, and Iran claimed, I think it was a spy drone. Then Donald Trump saying that they were locked and loaded. I think the phrase he used was cocked and loaded against Iran, but decided to pull any military action. So we had these tensions between the US and Iran. We've got clearly the threat of trade wars still, or the ongoing discussions. And we had a weaker US dollar. The only thing we didn't have to further boost gold was falling stock markets. Stock markets have been falling. That would have been the icing on the cake. But we've seen this massive move for gold. So from the end of May, about 1280, the price moved $160 near enough. So what's that? A 12% move, something like that in gold. That is a big old move. It's overstretched. I think it's overstretched up here. So for me, the opportunity is, it doesn't mean it can't go blasting higher, but I think the opportunity is if we see a half decent sell-off from these levels. So if we saw a move back to maybe the mid 1300s, perhaps that's the opportunity. And it put on that much in a week or so. I think it's entirely possible that we give up a whole chunk of these gains up here. So I'm thinking about, do I really need to think about taking some profits up here, because it has been such a surge. But I would definitely, for now, still be a buyer of gold on dips. We've got trend line support coming in at 1280. We've got the lows for the year, 1265. So for me, that's the big area for gold. It's a long way away. It's what, 10% away from where the price is trading now. But for me, any weakness still looks like a buying opportunity. Look how overbought it is. It's been overbought since the first week of June. The market surges higher, very overbought up here. It's probably, that's got to be the most overbought it's been for ages. Let's go back. We've got to go we've got to go back. I think it's the most overbought it's been for all the data we've got here, 7 years, 8 years worth of data. So it is looking quite extreme up here, a bit overheated, and bang, we'll see what happens. But I think a sell-off here for gold, but an incredible run over the last few weeks or so. And I know some of the people on these live streams, because they've been messaging me, have been in on gold. So I hope everyone has done okay on it. So let's see. But I think expecting a bit of weakness here. Let's take a look at crude oil, because again, of course, because of tensions, we had those 2 oil tankers that were attacked in the Strait of Hormuz, I think, a couple of weeks ago. And that's where the US drone was shot down. So again, tensions between major nations and oil supplying areas is always going to lift the price of oil. And we've seen it. So we're trading up at $58, $59 a barrel now off those, what were the lows? 50 and a bit, $50.70 in early June. So we've seen, what's that, 15% lift for the price of oil. Again, I think, I've got some long oil stuff at the moment, but again, I think it's maybe a little bit overcooked up here. We've seen a surge on these tensions. Clearly, if the tensions between Iran and US escalated, that's a fundamental reason why I would expect the price to get lifted again. But maybe if you're a betting man, you'd expect tensions to continue to unwind a bit. But looking at the chart for oil, we've got $60 is an obvious barrier. I think we were looking at this last week. $60 is a big hurdle from the end of May. We've traded as high today as 59.13, and it's the highest it's been. It's the highest it's been since back here, since the end of May. So if it was going to go short, I think we want to see a bit of weakness first. Let's flip this over to an hourly chart. Here we go. So there's our trend really off these sort of 51, 50, 50 lows back here. It's a market that still looks strong. We've got the oil inventories out this afternoon. And maybe for me, the trade to do from a short-term point of view is going short, but I don't think I'd want to go short yet because it still seems to be a bit strong. Let's at least have a day when it doesn't go up. But if it is going to run out of steam, this looks like a pretty good place as any, $60 a barrel. So I think it's going to be a really interesting market to watch. And we do have these inventories the end of the week, later on today at 3:30. So perhaps that will take some of the wind out of the sales of oil, but again, lifted by all of this tension. But like gold, perhaps it's gone a little bit too far in the short term. Let's take a look at FX markets. Then we will take a look at indices. I actually did a trade in another account just before I came on pound against the dollar, and I think it's interesting down here. Pound against the dollar. We were talking about this a bit again over recent weeks, where this massive decline for the pound from 134-ish in March against the dollar, traded as low as 125 less than a couple of weeks ago. And we were saying, if this weakness is going to turn around for the pound, maybe we're here. We've got these lows from December, just below 125. We've got 124, the spiky low from early January of this year. If we were going to pick up on a trend, I think you could argue that trend is still down. So if you really wanted to be a longer term buyer of the pound, I'd argue based on the trend over the last 3 months, there's no urgency just yet. And there's so much nonsense still going on with UK politics. We're still no clearer as to what's going to happen with Brexit. But I think it is interesting down here. It is almost looks like it's trying to stage a base. I actually bought it this morning, and maybe we'll do the trade on here as well. Why not do another trade? I bought it this morning really just based on the hourly chart. Looking at the strength we've had over the last 10 days or so, where the market's pushed higher. Yesterday it pushed out to its best levels for this recovery, and today. And it sort of reversed during the day. So we pushed out to fresh highs, reversed during the day. But we do have this old support left at 126.40. So I did a trade this morning at 26.78, I think. So about 12 points lower than where we are now. Just thinking, well, maybe we'll see the market have another look at 128. So I don't think that this bit of strength over the last week is over just yet. For me personally, so maybe 128 is the level we have a look at, and this is a big barrier. I think 128, 128.20 pound US dollar. Back in whenever it was early June, 127.60. It struggled. So I think this is an area where we are going to see sellers coming in a bit of backwards and forwards trading, but perhaps that turnaround yesterday has been a little bit overdone. And like I say, clearly it's not financial advice, but for me, that low back here is maybe an important one from June the 21st, around about 126.40, I think, for short-term traders. But looking on the dailies, there's no urgency yet, I don't think, to be a buyer for the pound. But I do think maybe we are building a base here. Maybe when we know who the Prime Minister is going to be, maybe when we have a bit more clarity on what is going to actually happen, what their policy is with Brexit, maybe we'll see a bit more of a decisive move. There's a lot of maybes in there. But you can see, just really how choppy trading has been over the last week, over the last month. We're pretty much trading where we were a month ago, pound US dollar. So I think there's an element of it marking time and treading water until we get a bit more clarity in here. Euro dollar. I think we talked about it last time around. I think the euro has got interesting now from a longer term point of view. So I'm I'm a fan of doing long-term stuff as well as the shorter-term stuff, and I just wonder when we get to the end of the year, without us all wanting to wish our lives away, will the moves we saw during June in euro US dollar have marked a turning point? And will the story for the second half of 2019 be one of euro recovery? And the reason I'm thinking that, I've gone through this a lot in the past, but it kept breaking down. It kept breaking previous lows. So we have it here in November, breaks that low, major low, doesn't get any momentum, breaks another major low, breaks again the previous major low in March, no momentum. So it keeps trying to break lower, but there's no follow through. Right. So it's almost as if there's no conviction in pushing the euro lower, even though it's been drifting since September. And then during June, we've had this breakout of the trend line. We've seen it yesterday hit 114. So it's best levels in about 3 months. So for me now, I would cautiously start to think the tide has turned for the euro against the dollar. So now, for me personally, rather than trying to sell into strength, I would definitely be tempted to try to buy the dips in euro dollar. So here's I think the first, if we flip this over to an hourly, maybe it's going to be a bit clearer. I think we've got the first, let's get rid of that. Maybe we've got the first tentative steps of a recovery in euro dollar. So it's been chugging away for about 4 weeks now. Our trend looks like that. We're up at 113.60. I think if we push down to the low 112s, perhaps that's the better opportunity, but I do think that's an interesting play, I think, for the rest of the year to see if we see euro recovery. We've got lots of hurdles. We've got the highs left from March, 114.50, the highs Jan, 115, then 115.70, then 116 something, 16.20 from October. So there are lots of hurdles. I don't think, famous last words, we're going to see it up at 125 at the end of the year, but perhaps the story over the next 6 months is one of more gradual recovery. So I think this breakout from this downtrend makes euro dollar really interesting now. So my bias would be to be a buyer on dips. Let's see what happens. Right, let's get into stock markets. There's a couple of questions come in, and I'll deal with those when we've had a look at stock markets. We'll get into the questions. So if you have any questions, just fire them in the chat on the right-hand side. So let's start with the S&P, the S&P 500. Here we go. Let's bring that up. So we did, very briefly, poke out, where were we? So the all-time highs were set in May, and the market pushed as high as 29.60. We briefly pushed out June the 21st, 29.64.9. All right, so the S&P is threatening these old all-time highs up here, and it is, pretty much 29.45, the highs from the end of September as well. So it's a big level, but there are some nerves up here. We're not seeing much in the way of follow through at the moment. So I think there's a couple of ways to trade this. Personally, if you thought that stock markets had gone too far and they were overdue a significant correction, it's a great place to go short because you've got a reference point. You've got these highs left up here, 29.65. If it punches much through those highs, the argument for being short deteriorates, in my opinion. I wouldn't want to be short just yet up here. And of course, if we go bursting through these highs, if we see a decisive move, we haven't got it yet. We're just flipping around these highs. If we get a decisive move through here, it's the classic breakout trade, and it does suggest that perhaps we're going to see the market move a lot higher. We've had a pretty inconclusive few days. We saw a big sell-off, relatively speaking, yesterday. Okay, so that was the move to all-time highs. Very brief move on the hourlies, you can see it there, and then drifted under a lot of pressure yesterday, trying to make it back up in the overnight market. So I think it's interesting up here. I still think a market that made fresh all-time highs 4 or 5 days ago, that is a strong market. So I think it's a braver person than me who calls the top. I'd still be looking to buy into weakness. We've got support back here, 29.10 from the 19th of June, and then a bit more support, 2900. So there's lots of support below the price. So I would be tempted to be betting on a turnaround for this slight weakness we've seen over the last few days. So yeah, I think that's it really. I'd be looking to just buy the dips, but we did have a big sell-off yesterday. But I think these markets, by definition, still strong. Let's take a look at the Dow, then we'll do the Nasdaq, then we'll bring it back to the European markets, then we'll get into the questions. So the Dow looks like that. So the Dow, so again, the Dow punched as high as 26,917. Big down day yesterday. You can see that candlestick yesterday. So quite a big range yesterday. What was that? More than a 300-point range on the Dow yesterday. But like the S&P 500, lots of support, sort of 26.5, back here at 26.4. So again, I would be very wary of these markets just snapping back and rallying. So it's a bit of a weaker day yesterday, but perhaps we'll see a stronger finish to the week. Then we look at the Nasdaq. I'm guessing these US markets are all going to look pretty similar. And then we'll have a look at the DAX and the FTSE. So yeah, there we go. There's the Nasdaq. Let's flip it over to a daily chart. We've got a bit of a dodgy line in there. I'm not quite sure what that's doing. Let's get rid of that. There we go. So again, the Nasdaq, we haven't actually seen the same sort of move in the Nasdaq. So some of these tech stocks, the big ones, the Facebooks, the Netflixes, the Amazons, the Googles, perhaps not doing as well as the broader market because they had put on a lot last year anyway. So the Nasdaq has not got back to its previous highs from April, up around 7.8, 7.9, maybe that sort of level. But again, I think plenty of support just below where we are now. Let's take a look at the DAX and the FTSE, then we'll deal with the questions. So the DAX, let's bring this up. So the daily chart for the DAX, again, the DAX is a completely, not completely different market, but we've got US markets hitting fresh all-time highs, and the DAX is still 1,300 points, 10% below its high from January 2018. And clearly we've had some weak data from Germany recently. We had I think it was industrial production numbers in April fell by the biggest amount in 4 years. So the German economy looking a little bit shaky, to say the least. So the DAX hasn't been performing as strongly. But again, I think we're just below the highs for the year, 12,500. We've had 3 days of the DAX selling off and a big up day so far today. That's the move in the DAX today. I think it can be quite a hard market to trade. People like it because it's volatile. It does move around even on quiet days, the DAX, but clearly it's going to be dictated by what's going on in US markets. So I think the US is the one to watch. And there's just the last one on stock markets, the FTSE 100. FTSE 100. Here we go. Let's flip this over to a daily. So the FTSE is it's a little bit boring, I suppose we could say, over the last couple of weeks. But again, good support at 7.3. Maybe an hourly chart will make more sense on this because it's been pretty low volatility. I mean, it's a pretty scrappy trade, isn't it? We're trading where we were sort of 10 days ago on the FTSE. Lots of support ahead of sort of 73.50, that sort of area. It has held the market up the last couple of days. Up here has been a problem though, ahead of 74.80. So the FTSE is a little bit trapped in this sideways range. I think the FTSE can be an odd one to trade because so much, the pound, what's going on with the pound clearly has an effect on the FTSE. And personally, I'd much rather be watching US markets than the FTSE 100. But I think if we see these US markets snap back, we'd expect to see the European markets get dragged higher as well. So that's it. So what to watch? And then we'll get into the questions. Gold and oil, great moves in gold and oil over the last couple of weeks. But even me, who thinks they're going to go higher, I think in the short term, they're going to feel the squeeze because they've been overdone, I think, those moves in gold and oil. Stock markets, expecting them to snap back. Bitcoin, incredibly strong, but again, overdue a correction. But I think that's the opportunity. If we see a sell-off in Bitcoin, that's the opportunity. And the euro for the more longer-term patient traders looks interesting now, I think, because maybe we're breaking out of this downtrend that's been in place since September of last year. Right, let's get into the questions. So somebody's asked, what is a Death Star drop? Do you know what? I have never heard of that. So I'm going to do a quick Google here. Hang on a second. Death Star drop. Okay, Lego Death Star. I'm guessing it's not that, is it? I don't know. I don't even know. There's nothing on Google about a Death Star drop, so I can't help you with that one. I'll do maybe a bit more research. There's thing. Oh, is it a candlestick pattern, a Death Star? And there are so many of these different candlestick patterns. I get a little bit confused. Oh, here we go. Death Star candlestick. Is it the gap, isn't it? It's the gap higher. Okay, it's this sort of thing. Is it like an evening star? I don't want to waste too much time on this because I'm really struggling there. So I think it's where the market's gapped higher. I wouldn't worry about it. I think people put far too much emphasis on single candlestick patterns. I'm a much bigger fan of at least 2 days of candlestick patterns. And I'll show you what I mean, because I think there was one in euro US dollar yesterday. Let's just bring that up. So for me, patterns like this, let me zoom it in. Here we go. What happened yesterday in euro dollar, where it engulfs, bearish engulfing the previous day's candle. I think, 2 days of price action, which again is only 2 days, is much more relevant than just 1 day, a 1 day Death Star candle. That's a suggestion that maybe the market's under pressure. So I wouldn't worry too much about a Death Star drop. Can we have a look at Canopy Weed, please? So I reckon this is one of these newfangled marijuana stocks, isn't it? Canopy Growth, here we go. Let's have a look at that. I must admit, I never look at these things. I know they've been incredibly volatile, but let's take a look. It's just interesting, isn't it? So you're saying a long trade, but not sure. Okay. I would say that here, I mean, that's an incredible move, isn't it? Let's go back. When did they first come to the market? So we've got data going back to 2014. It was trading at $2 a share in 2014. And it has traded as high as 73 end of last year. I suppose the aggressive move here, I'd agree with you, is long, but it's an aggressive trade, because we've been pretty much sideways for the year so far. We had the surge in Jan. We've been a bit sideways. So we've not taken out the old highs. We've had, support at about $53 a share. It has a little look through it there, end of May, beginning of June. As a poke through it yesterday, day before yesterday, and a bit weaker today. So I suppose the bet here is that actually these probes we're seeing through $53 a share, we're not seeing any follow through selling, are we? So I'd say the aggressive move is to be a buyer, but with a stop loss, maybe the other side of Monday's low. So Monday's low is $50.65. Maybe at 49.5 or something is the aggressive trade, looking to see if it can ramp its way back up to the 70s from here. So it's interesting, but it's not a trend following trade like sort of back here would have been. It's the market has gone a bit extreme trade, I think is the sort of trade it would be here. But I think if we start slipping much below 50, I think the risk is we'll go back to these December lows, down below 40. So I think it's an interesting one. Like I say, I never watch these stocks, but I think just based on what the price action's been doing, I think it is interesting down here. And sterling yen, the old favorite, sterling yen. Let's bring that one up. GPP, JPY. So a bit of a quiet, like pound against the dollar, because we have seen a bit of stability come in for pound against the dollar. The same sort of thing for sterling yen. So a bit of a flat week for sterling yen. It's a bit of an odd chart. I think there's a couple of things though we can take from this. Arguably, I would want to be a buyer. I'll go through. Actually, maybe let's do a trade on it to make things interesting. But we had this spike low in Jan. The low is 131. So it's 500 points away from where we are now. So at the moment, that's pretty useless to me as a reference point. So I think maybe what's more interesting, it's what's gone on during May. So we saw, during June, sorry. So we saw the market trade as low 136.60. Let's flip this over to an hourly chart. And I think it's one of these things again where, those were the lows in early June, late May. And we've seen plenty of sort of push below those lows, but no real follow through. So again, I think the question here is sterling yen forming a base down here? And if I just flip this back to the daily chart quickly, then we'll come back to this. You could argue, and I would argue, that the RSI, this is quite a bullish RSI. We've got the market slips to a low, RSI goes oversold, as you'd expect. Market pushes a bit higher, and bang, turns down and hits a fresh low. But the RSI doesn't. Okay, so this is known as bullish divergence. When the market is making lower lows and the RSI is making higher lows, it can be a suggestion that maybe the weakness is running out of strength. And I think the price action is backing that up during well, at least like the last week or so, you know, where we have broken these old lows, bit of a sell-off, but the market's trying to claw its way back. So maybe the trade here, let's say, I mean, if I was going to be a buyer now, I would want my stop. The closest I'd want it is under these lows from the 25th of June. For me, the better stop are the lows from the 18th of June, so 135.34. So let's say we did that trade. Let's put 1,000 in first of all, and we'll try and figure out the size. Hang on, I've got to type it in. 1,000. So if I was going to put my stop loss, the other side of 135.36, say 135.20 is my stop. So 135.20. Oh, I'm not going to put a profit target in. So that gives me a loss of £9.52. I think we normally do sort of 20. What do we normally do on these trades? About 25 quid loss, don't we? Hang on. So that's it. Where's my little ticket gone? Hold on. So if we buy 2,500 with a 135.20 stop, that should be about 20 quid. There we go, 20 quid. So let's put that trade in. So I think that's maybe an interesting one to do. You know, just based on what's been going on with the dailies down here, what's going on with the RSI. If it's going to stage a recovery, sterling yen, it shouldn't take out those old lows. So that's the bet, basically. Yeah, that if we're going to see a recovery, then bang, it starts moving higher from here. But let's come back to it next time around and see what's going on. So I think it's going to recover. I've been shorting natural gas and it seems to have no real bottom. Any thoughts? It's an interesting one, natural gas, isn't it? It went absolutely loopy last year, didn't it? And I remember there was an options fund that basically got blown up by this move in natural gas from September. So it went from 277-ish to nearly 5. So a massive move. And I think this options fund had been betting on low volatility. There's a way, by selling options, you collect premium. It's a bit more complicated than the sort of stuff we talk about in here. But you collect premium and you're betting on for low volatility to continue. And if it does, you just bank the money for the option sold. But when it goes wrong, it can completely rip your face off, which is what happened with natural gas to some options traders in late last year. So there's no bottom. I mean, that looks really weak, doesn't it? You've been shorting that. You've been doing really well. You know, we've seen the market go May the 20th, 273 down to 226 today. Where are the levels to watch? I think, let's flip this over to a weekly chart. We've got to go quite far back, haven't we? We've got to go back, 3 years. I mean, clearly 2, you know, these old lows, 1.7 to 2 has been a level for natural gas. You know, so I think there is support coming in there. Let's have a look on the hourly, see what it looks like. We did see something of a sharp turnaround over the last few days. But, you know, the textbook approach, I think, as you're saying, would still be to be short, wouldn't it? Because the trend is still down. We get a rally, blah, 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 and then bang, the market moves lower again. So for me, I'd still be going short as well. I'd probably got my stops somewhere above 2.4, but just keep an eye on that big old support from 2016, May 2016, sort of down around 2. But it's an interesting market. That's it, I think, isn't it? So we've done a lot of stuff today. So let's see what the next week brings. But I think we could see quite an interesting end to the week, given how overextended potentially oil and gold are, and given how strong stock markets were last week and been a bit under pressure this week. Will they snap it back? So we'll see. We'll see what the rest of this week brings. As usual, if you have any questions, you drop me an email, david.jones@capital.com. I've not tweeted for a while. I'll have to start again. You can follow me on Twitter @JonesTheMarkets. We are going to do a more in-depth Bitcoin video. I'm going to start doing that as soon as I finish this. So that will go on the channel in the next couple of days. So to never miss out, we've got one on Apple going up soon as well. So to never miss out, just make sure you're subscribed if you're watching this video by clicking subscribe, and the alarm bell notification thing means you get a push off YouTube. And if you find these things useful, if you can click on like, because it helps our YouTube algorithms, which are important, so I'm told. So do that. And if you have any questions after watching this, just leave us a question in the comments and I do check back. So that's it. So quite a long one today. Hope you found it useful, and see you all again next time. Thanks for coming along. and good luck with your trading.